US President Donald Trump and the European Union chief Ursula von der Leyen have reached a trade deal during talks in Scotland. Now, the agreement caps months of negotiations. Now, most tariffs on exports from the EU will be set at 15%, including for cars, semiconductors and pharmaceuticals. A US official said that Washington would keep its 50% tariff on steel and aluminum imports. Now, Trump says the EU will invest an extra $600 billion in America and buy $750 billion worth of US energy. And both sides have praised it as a good deal.
I think it's great that we made a deal today instead of playing games and maybe not making a deal at all. I think it's, I'm going to let you say, but I think it's the biggest deal ever made. Thank you very much. Congratulations.
15% is not to be underestimated, but it is the best we could get. So I think we should not forget where we would have been on the 1st of August. We would have been at 30%. And it would have been much more difficult to get down now to the 15%. 15% is certainly a challenge for some, but we should not forget it keeps us the access to the American market. And what we are also doing intensively is diversifying to other regions of the world.
Well, let's discuss this with Alan Auerbach, Professor of Economics at the University of California at Berkeley. Good to have you with us. What are your initial thoughts on this new deal?
Well, I think it removes a lot of the uncertainty that had been present before with the threats of 30% tariffs starting on August 1st. So in that sense, I think it's a good thing. Of course, all of this uncertainty was manufactured by the United States to begin with. So it's a little funny to say it's good news that the news isn't as bad as it was before, but I think that is the situation we're in.
I mean, but there's still a tariff. It's not as high as what would have come if they hadn't met this approaching deadline. Did the EU get the short end of the stick?
Well, it's a little hard to measure. I think both countries would be better off with freer trade, and this trade is not as free as it was at the beginning of the Trump administration. It's not as hindered as it would have been had the 30% tariffs gone into effect. I think the resolving the tariffs, lowering the tariffs from where they were for some goods like cars, which were facing a 25% tariff already, and now it'll be 15% along with everything else. I think it's somewhat helpful. It's still going to be a challenge for Europe. 15% tariffs are much higher than they were facing Europe from the United States at the beginning of the Trump administration. So one shouldn't celebrate too much. I think it's just a question of being relieved that things aren't worse than they are.
Tell us more about the specifics on how this will affect businesses across the EU and the US.
It's going to continue to impose tariffs on EU producers, in addition to the other tariffs that are still in existence, like the 50% tariff on steel and aluminum, which remains in place, not just for Europe, but for other parts of the world as well. This means that Europe's exports to the United States will be discouraged relative to exports to other countries. And as one would expect, Europe will be looking to diversify its exports to other countries that have a more favorable approach to trade than the United States does right now. It's not a disaster. 15% is noticeable, but it would not as bad as what would have been. And I think there's some discussion, and it's very vague in the discussion of the agreement, that there may be lower tariffs on certain strategic commodities. Like it remains to be seen what that amounts to. The other components of the deal, I'm not sure how to think about. The agreement to buy $750 billion of energy. The U.S. is already exporting a lot of energy to Europe. Energy is traded in a world market, so I'm not sure how much difference it makes how much energy the U.S. sells to Europe as opposed to selling to to other places and Europe buying from other sellers. I'm not sure exactly what the additional $600 billion of investment in the U.S. from Europe means. I guess it really depends over what period of time. That is a lot of money. And if we're talking about Europe investing in $600 billion more than it otherwise would have over a short period of time, that's a very large amount of money. And I'm not sure how that will be accomplished. After all, Europe is not a centrally planned economy. Businesses make their own decisions about where they invest. So I guess we'll wait to see the fine print on that part of the agreement to try to understand better what it means.
Okay, we'll be keeping a close look at that. Alan Auerbach, Professor of Economics at the University of California in Berkeley. We appreciate your insights. Thank you.
Thank you.